Well, I think it goes without saying, September was an absolute disaster for all investors. After Jerome Powell came out more hawkishly than ever before, and all the hysteria because of the government shutdown stole the headlines thereafter. As for me, I was actually only using these days in the red to load up on certain positions, and actually ended September on the highest of highs, bringing in nearly $400 worth of dividend income, which is what today's video is going to cover, all 13 dividend stocks that paid me out during the month of September. So with that, let's get right to it. Now, if you're new to the channel, I want you to know that I'm not here to share how much income I received from each company and leave you with that, because that would be useless for all of you and really boring for me. So I actually want to gift you all with the company that paid me out in a dividend, my thoughts on the actual company as of this video, and most importantly, what I'm actually planning on doing regarding each holding, whether I'm buying more shares, selling, or simply just holding for the longer term. Then after all is said and done, I want to actually jump right into the dividend tracker with you so you can actually see firsthand the sheer power of dividend growth investing for yourself working in, well, my favor. Now, before we get to breaking down these dividend stocks, a brief account update, whereas my account still hasn't recovered from the September mayhem as it's sitting at $115,523.48. However, as I said before, I'm using all of this time wisely to continue to invest into high quality companies, which leads me to the first dividend stock that paid me out on the 6th of September, Southern Company, ticker symbol SO, which found its way into my portfolio a few years ago and fared me very well. It's actually the second largest utility company in the United States in terms of customer base that they have in the South. Now, utilities, for the most part, always remain a safe bet, but can find themselves in the crossfire of volatility as we see Southern Company currently trading for $60 per share right now. That's down about 7% year to date with a PE ratio at 22.9. Yet have a look at this beautiful 5-year growth rate here with over 85% worth of it. And while analysts foresee upside, a little over 12% worth, I'm looking into the insiders to see a lot of selling. And honestly, as of this video, I'm sharing that it may not be done sliding just yet, depending on the turning of the tides in the market. But personally, I'm just going to hold tight right now and enjoy the dividends after receiving $7.10 for owning 10 shares, thanks to their dividend yield coming in at 4.33%. Next up, the following day, arguably one of my favorite dividend stocks paid me, good old Johnson & Johnson, ticker symbol J&J, which is our industry leader when it comes to healthcare. Whether it's medical technology, pharmaceuticals, or consumer goods, J&J is just the leader for the last 150 years. Yet as of this video, it's actually down by 10% on the year, trading for $155 per share. Not exactly on the radar right now as a buy for me, but we do see over 27% worth of growth over the last 5 years. Now, usually J&J fluctuates between $150 and $175 per share. So it's certainly approaching that 52-week low mark, but I remain a little more focused on a couple other positions after building my J&J position to 100 shares, which allowed me to receive $120.01, thanks to their dividend yield coming in at 3.06%. And of course, I'm going to be holding on to J&J likely forever, only to revisit buying more shares once again over time. After all, we have hedge funds that are loading up on J&J, and as well as bullishness from analysts with 14+% worth of growth forecast to come back up to $178.64. Now, on the same day, another dividend paycheck from a rather recent addition to my dividend portfolio, Discover Financial, ticker symbol DFS, which is one of the largest direct banking and payment services companies providing lending services for a plethora of needs to all of us consumers. Not long ago, it fell from a peak of around $129 per share to just $86 per share at a PE ratio of around 6 after some misclassifications and an investigation which led to Discover seeking a new CEO. Now, I bought it as a potential turnaround swing trade and only have 2 shares given it was bought with leftover funds in my IRA, but nonetheless received $1.40 from it thanks to that dividend yield at 3.23%. And while I won't be buying more shares, it might be a great opportunity for all of you as it recently popped by over 7% given the news of the Discover team coming to terms with the FDIC to improve consumer compliance, as well as analysts foreseeing upside, about 21% worth of it coming back up to $110 per share, smart money doubling down on it as well. Now, time will certainly tell when it comes to Discover's future, but hey, this might be a great opportunity again for you. However, we're We're going to jump now to the 5th of the month, where we had a much larger payday with Tyson Foods, ticker symbol TSN, sending me my first dividend paycheck of the day. Now, I couldn't think of a company that has been through the ringer more than Tyson after being destroyed from our economic environment of higher costs of animal feed, wage inflation, as well as the cost of transit. All now on top of an open investigation along with Purdue on child labor matters. But nonetheless, it's the largest producer of beef, chicken, and pork within the United States. So I think we're pretty safe over the longer course of time. And it may be worth beefing up your portfolio with Tyson, given it's currently down by 20%, trading for $49 as of this video, which is less than the cost of a good steak. And on a positive note, we do see plenty of hedge fund activity when it comes to Tyson, as smart money loads up with over 312,000 shares last quarter. As for me, I'm going to continue to hold my 22 shares until their comeback, which allowed me to receive $10.75, thanks to their dividend yield coming in at 3.8%. Now, investors, we've covered 4 of the dividend stocks that paid me during the month of September. But before I go any further, I want to ask for your help directly here in letting me know that this content is helpful for you and whether I'm actually delivering through on the value that you're looking for. So let me know by tapping on the thumbs up button. It would certainly be a huge help on my end. Of course, then I'd keep creating content just like this. With that, let's go ahead and talk about Realty Income, ticker symbol O, the 5th dividend stock that paid me out a dividend in September. And if you're a dividend investor, I'm sure this one isn't a surprise to you, as it's known as the monthly dividend company, operating as the largest net lease solutions REIT with over 13,000 properties spanning across the United States, with over 1,300 clients to lease them out. Now, feel free to check out this video right along here for more on Realty Income specifically, but I will only ever continue to buy more shares with Realty Income, especially at a current share price of $49 per share, which is over 18% down year to date, with top analysts projecting over 40% worth of upside to bring it back up to almost $70 per share. Of course, a major blow to all REITs has been the talk of higher interest rates, but Realty Income is unlikely to be impacted over the longer course of time and makes me comfortable enough to hold on to my 112 shares, which allowed me to receive $27.38 thanks to their dividend yield coming in at 6.15%. But that wasn't it from the real estate sector. Stag Industrial, ticker symbol SCHD, also paid me a dividend on the 15th. Now, I'm going to share with you honestly that I did sell 14 shares worth of Stag recently, leaving me with just 15 left, but I got paid on all 29 shares, totaling $3.68 thanks to their dividend yield coming in at 4.26%. However, Stag, a REIT that's focused on industrial properties like warehouses, continues to stabilize itself in the green this year, up by over 10.3%. But I'm just not sure it has any life left in my portfolio, and I'm likely going to be selling out of it entirely when it hits the highs of the analyst expectations at $40.50 per share. It's about 17% worth of upside. Next up, McDonald's, ticker symbol MCD, which doubles as a fast food behemoth, but more importantly and often overlooked, a real estate powerhouse. Now, when it comes to McDonald's, it will never truly be discounted. So when I do see it sliding in the current market conditions to a share price of $258 from $298 at a PE of 24.3, along with a 5-year growth history of more than 78%, yeah, I'm buying more shares. But what's more is the fact that so too are hedge funds, and likewise when it comes to analysts, as they remain bullish, forecasting over 28% worth of upside. So if you're holding for the longer term, I say why not enjoy a happy meal on the McDonald's dividends. And speaking of which, I received $4.74 for holding just 3 shares, thanks to their dividend yield at 2.31%. Jumping to the 19th of the month, Stanley Black & Decker, ticker symbol SWK, paid me a dividend. And here's another solid opportunity for all of us if you're willing to remain patient and stomach the economic slumps, as Stanley Black will be back. But it's going to take some time because the market's going to need to flip back to green. And you see, Stanley Black & Decker is the world's largest tool manufacturer. With stockpiles of tools built up over the last couple of years and home builders essentially on standby, the stock has been suffering and down right now by almost 50% from a few years ago, trading for $80 per share at a PE of just 16. Now, I don't think this deal will last forever, and a matter of fact, hedge funds have already been pouring money into this stock while analysts remain bullish, predicting nearly 21% 100% worth of upside, giving way to a share price of $97.86. But considering I bought Stanley Black & Deckard within my Roth IRA and don't have any more funds to buy more, I'm going to keep patient with my 20 shares before their rebound, and I received $16.77 thanks to the Stanley Black dividend yield coming in at 3.88%. As for this next dividend stock, the world's most dominant defense contractor, operating on a global scale and delivering the most advanced weaponry and wartime vehicles as well as aircraft to allied forces, Lockheed Martin, ticker symbol LMT, which despite being such a dominant player in the industry, slides when the war is not being fought in the battlefield but an economical one. And here we are with Lockheed trading for about $100 off its peak earlier this year at $501 per share to just $407 per share now at a PE around 15. Given the amount of times that I have also mentioned Lockheed recently, I'm just going to say this to keep it simple. It is a buy in my book for the longer term, with analysts foreseeing over 21% worth of upside and plenty of insider buying activity taking place as well from corporate executives. As for me, I'm going to hold on to my 6 shares after having just bought a couple more over the last couple of weeks, which allowed me to receive $18.71 from Lockheed thanks to their dividend coming in at 2.93% worth of a yield. Now, heading back into the financial sector, Bank of America, ticker symbol BAC, paid me a dividend as well, and I think it's noteworthy for you all to recognize that it's the second largest bank in the United States with a moat-worthy balance sheet to the likes of JP Morgan. And in other words, it's just too big to fail of a bank, and one that may be worth an add if you're looking to add a larger bank into your portfolio with some safety behind it, especially as it's down by 18% year to date, trading for just $26 per share at a PE of 7.9. Furthermore, plenty of bullishness from smart money with over 8.9 million shares purchased last quarter, along with analysts foreseeing over 34+% worth of upside. Now, I'm going to be honest with you, I'm not a buyer of Bank of America right now, but a fan of it, holding 15 shares, which allowed me to receive $3.60 thanks to their dividend yield coming in at 3.51%. Now, finally, as for the last individual stock, Devon Energy, ticker symbol DVN, which is focused on hydrocarbon exploration and a leader within the energy sector, sent me a paycheck for $23.28 for owning 47 shares, to which I'm simply waiting for a rebound here. And just considering the fact that it's down by over 14% year to date, trading for $45 per share at a PE of 6.5, it might be worth your attention with plenty of bullishness from insiders, the executive level, to hedge funds scoring more shares as well, with analysts who still foresee over 31% worth of upside. Now, I'm not a buyer right now of Devon Energy, but I appreciate the opportunity that it's presenting for the longer term dividend investors who are in fact out there. And last but not least, I got paid $150.20 for having money in Vanguard's total stock market index fund, ticker symbol VTI, which brings us to a grand total of $387.08 for the month of September. Now jumping into the dividend tracker, because I do want to show you this growth over time as we're now averaging over $130 every single month in passive dividend income, and we're well on our way to outbeating last year's annual total for a brand new annual record. That's how it's done. Now, investors, I want to know how much you brought in during the month of September, so go ahead, comment down below to let me know. Of course, I also want to know your top winners, and heck, even your losers. If you're looking for more dividend stock ideas or insights, you're going to find them right here. But before you go, be sure to subscribe to never miss a single video.